welcome to the Red Wagon Estate Planning and Elder Law Show, hosted by me, yours truly, Jeffrey Belomo, where we discuss all things estate planning and elder law, and well, hey, anything else you want to talk about. And today we're going to have a little bit of fun with my friend Ken. Ken, how you doing, man?
Doing very well, Jeff.
Excellent. So go ahead and introduce yourself. Tell us your name and where you're from.
Ken Pitts. I own First Choice Mortgage Advisors, and we're a mortgage broker right outside of Philadelphia in beautiful Chester County. And
Yes.
we are licensed in PA, New Jersey, Delaware, and Florida.
Yeah, so as you can tell from what Ken does, it'll be a little bit of estate planning and elder law. I mean, maybe not directly on point. We might be talking about and anything else we want to talk about as well, but certainly there are a lot of ties to the estate planning and elder law arena, so I'm excited for this. Just as a reminder, as I always do on my podcast, please don't take information that you get from this show or any other radio show for that matter to constitute legal advice. If you're looking for advice in a specific situation, please call an attorney in the state that you are living in who practices in the practice area that you are looking for to get specific advice for your situation. Ken and I are here today for informational and educational purposes only, and to just have a little bit of fun together. And as always at Belomo and Associates, we pride ourselves on education first and foremost. So if you want some education in regards to pre-planning in the estate planning context, crisis planning in the estate planning and Medicaid context, special needs planning, probate administration, or trust administration, we are definitely known for the educational piece. We offer free educational workshops to get you and your family educated so that what happened to my family doesn't happen to yours. So we would be honored and humbled and privileged to assist you and to give you all the education. And we always say, get it before you need it, because it is certainly a lot easier to understand when you're not in a stressful situation. So, all right. So Ken, how'd you get into the industry? I'm just curious.
Hey, before we get started,
Yes.
I'm going to say this. I've attended 2 of your estate planning seminars.
Yes.
They were hugely helpful for me. I would recommend that to any of the financial professionals out there that maybe see this. It is well worth your time and effort to get out there and go to one of your continuing ed pieces, because it was eye-opening, filled in a lot of gaps for me in understanding just even my role in financial planning and where I can be helping people and how it relates to what you do. So it was very helpful.
Wow. Thank you. And specifically for the financial and healthcare professionals out there, we offer boot camps, financial and healthcare professional boot camps, several times a year, typically in the spring and fall, but sometimes we do 4 times a year, sometimes we do 3. So please check us out, www.belomoassociates.com, or give us a call, 717-845-5390, and we'll be able to give you the dates for the upcoming workshops and boot camps, I should say, approved for 6 free credits for both the healthcare professionals and the financial professionals. And I really appreciate the kind words there and the shout out. I love doing them. That's probably one of the most favorite things that I do. And I've joked and said if I could figure out a way to do nothing but those every day and make a living, I would love to. It's a lot of fun hanging out with financial professionals and healthcare professionals, teaching for a day. So yeah, if you're looking for credits in those areas, or just a professional that wants to know more generally about estate planning and elder law. So thank you, Ken. That was very nice of you. Certainly not expected, but very much appreciated. So tell the listeners how you got into the mortgage industry.
I backed in.
Yeah.
I started, I actually was a realtor 30 plus years ago, and it was a market where they didn't do mortgage pre-approvals in advance. So I knew a guy in the mortgage business, and I asked him how I could figure out if a buyer could qualify for a mortgage.
Okay.
And back then, they didn't have buyer representation. Tells you how far back it goes.
Really?
Where I was in the business.
I was going to say, I don't remember that.
Yeah, so it started in California. There was a movement for certified buyer agents.
Okay.
And I kind of jumped on that and said, hey, if I'm going to get involved, this is the way I want to get involved. And I was a buyer's agent, and man, the hoops that companies would make me go through to show a listing because I was not representing the seller. It was really interesting. It was eye opening. I think the state finally figured that out and eventually changed the law to be you had to have representation, buyer side, seller side. But back then, buyers were not represented as
Wow.
exclusively the way we had to do it. So anyway, the gentleman in the mortgage business who taught me how to qualify borrowers kept having conversations with me, and he ended up luring me into the mortgage business, and that's how I ended up getting into the mortgage side, because he could see that I understood the finance part of it, and he thought that that I was better suited for that, and he kind of talked me into going with his company, and 30 years later, here I am owning my own mortgage company.
Wow. Now, did you completely get out of the real estate side?
Yes, yeah.
Wow.
I went completely into the financial side of it, and I started off the very interesting side of it because it gave me a whole different viewpoint of the business. I mean, most loan officers enter the business as salespeople,
Okay.
and they're relying on people in the back end to make sure that what they're trying to put together works. I was the back end. I was the deal desk for the mortgage operations that was in 13 states. And basically, the loan officers would call me, and I would figure out how to structure their loans. Reading, this stuff wasn't online then, reading the Fannie Mae, Freddie Mac, FHA, VA guidelines.
Which
I
is
would
not
tell them-
easy.
I would tell them what they could do and what they couldn't do, and how to structure a loan. And we had private investors too, and I would have to learn their guidelines. So I was the guideline answer desk for several years, and I figured, hey, I know how to put these deals together. I might as well go out and start selling them. And so that's how
So I have a naive question. Obviously, that's not my industry. Could you be a real estate agent and a mortgage broker, or is that a conflict?
No, you can actually do it.
Okay.
It's you're walking a little bit of a compliance tightrope when you do it, but you can do
Okay.
it.
Wow. Yeah, that's interesting. I realize you don't do both. I was just curious if you could.
Yeah.
Well, how'd you get into real estate then?
Well, that was more of a kind of a recommendation from my brother. My
Okay.
brother, I started off when I graduated college. I started off as a teacher. I was teaching history at the high school level, and one summer, my father had a company that was selling. Back then, they called it interactive video disc training,
Okay.
which eventually morphed into what we now see as online training
Okay.
on the internet. But at that time, they were marrying two different technologies to do training, and they had all these educational products. And they said, "Hey, why don't you come work here for the summer and see if you can introduce these products to teachers and whatnot?" And so that's what I did, and I made more that summer than I did the whole rest of the year teaching. So I decided to stay with my dad's company. And
Holy cow.
as things were starting to evolve and the technology was changing, my brother, who was always in investment real estate, said to me, he said, "Hey, I don't think our industry as we do it is going to continue, and you might want to look into something else." And he had suggested, he was the one who handed me a book on buyer agency out in California, and
Right.
that's how I got involved in being a buyer's agent, and then that morphed into me being in the mortgage business for the last 30 years. So.
And what advice would you give to somebody who is thinking about buying in the next 6 months? Is there anything they can do ahead of time? Is there anything they should do? Is there any advice you give?
I mean, it's always a good idea when someone's looking to purchase. It's always a good idea to figure out what you're going to be approved for.
Okay.
Know your budget.
Okay.
Know if that budget's going to meet your wants and desires in a home. I mean, that's really important. It may be that where you have to scale back what you want because you're not going to be able to afford it. Or maybe you find out, hey, I'm making a good decision. I'm buying in a price range that's going to work, and I'm still going to be able to save money and live and not have to eat on hot dogs and peanut butter.
Okay.
Yeah. But it's always that's the first step. It's not
Okay.
looking at homes. It's always fun to daydream and look at homes, but if you're serious about buying, you need to get the finances in order, and that's what we do.
And how long is a pre-approval good for? Is that a couple months, a few weeks?
They're good for 4 months, but it
Okay.
doesn't take much to re-up them. We usually ask for an updated pay stub, and we'll do what's called a soft pull on your credit to make sure everything stayed the same. You didn't
Okay.
overextend yourself, and if all the numbers are still checking out, you're good for another 120 days.
Oh, so there's really no harm in getting it done early, like when you
Nah,
were okay.
early and often is what I say. You want to know what you can
Okay.
afford, and because now, as you know, we've seen this market is morphing.
Oof.
Prices are going up, and interest rates have had a lot of fluctuation. Unfortunately, more to the high side than the low side. So we've had to
Right.
redo numbers with people and kind of change their perspective on what was good on the budget. But
Yeah,
my
because the rates aren't locked in. It's just a pre-approval that you're good for
Right.
a loan.
Yeah.
Okay.
Until you put an agreement of sale in, that's when you lock in. And you know, my getting back to what advice for people is, a lot of people think that there's going to be this readjustment of value going forward, and that maybe now's not the time to buy later. The statistics, demographics are telling us prices are going to continue to go up. There's going to be
Oh.
more demand than supply for quite a while. And when I mean quite a while, I mean like the next 5 years.
Oh gosh.
So waiting for rates to come down or waiting for prices to come down, you'll probably end up paying more
Wow.
for sure. So
Wow. And recently, I mean, rates are going up and down, right? I mean, it doesn't seem like it's consistent. Like it's
Yeah.
all over the place.
there's an oversupply of bond selling that's going
Oh.
on right now. We probably have, if that situation weren't happening, we'd probably be in the low sixes right now.
Oh.
And these Fed moves, everybody automatically equates, oh, the Fed raised interest rates, therefore mortgage rates went up.
Yeah.
They go in opposite directions. When the Fed is increasing interest rates, they're fighting inflation. Inflation is what drives long-term interest rates up. So
Oh.
as the Fed's fighting inflation, it actually helps us. So the last couple of moves should have brought rates down. But as we know, there was a little bit of a banking crisis out there. And
Yes.
part of that banking crisis is they look at the balance sheet of a bank. And if you're holding 10-year and 20 and 30-year treasury bills under 3%, you're underwater. And so they were encouraging banks to sell those, which flooded the market with bonds, which forced our rates to stay high to attract investors.
I
So
had no idea.
yeah, so there's a lot of readjusting going on right now. But unfortunately, as we just saw this weekend with Yellow trucking going under, the cost for businesses to have debt on their books is high because the rates are high.
The rates are high.
And,
Yeah.
and I don't think the Fed wants to keep them high for much longer. So I do, my prognosis for the next year is we'll probably see some rate relief in the next year.
Oh wow. Okay. But you said that's not necessarily directly tied to the interest rates.
It's not tied to what the Fed's doing with rates.
Okay. I got you.
It's really everything's supply and demand. That's economics. And if
Yeah.
you have an oversupply of bonds being sold, demand is going to go to the cheapest player. And when there's banks have to sell off maybe they have $1 million of 10-year bonds, and they got to sell them at a discount. So companies are buying them for $850,000, and the bank's taking a hit, but they're balancing out their balance sheet. So that's what's going on. That's why there's an oversupply right now, and that eventually will stop. And then the real numbers, the fact that inflation's been going down, we've been seeing that over the last few months, that'll start to help the interest rates get lower.
Wow. That is fascinating.
Yeah, a lot going on. There's a lot going. This is, I've been doing this a long time. This is probably the most complex market with things happening that are affecting interest rates that I've seen. Where there's so many different things affecting it that you just have to stay on top of it and see where things are going.
And Ken, I don't want to forget to do this. If somebody was looking to get in touch with you for a mortgage, how would they find you? How would they reach out to you? Phone number, website address, maybe?
Yeah, it's easy to find us on the web. We're www.firstchoicemortgageadvisors.com, and they can find us there. You can find me directly there, or my partner Chris. And I always tell people, man, I'm easy access. 610-637-7325. It's going to be on my headstone. It's been my number for years. As somebody can always contact me directly at that number.
Oh, that's incredible. That's incredible. So I asked you for advice for new people getting into the market. What advice would you give people who currently have a mortgage, and maybe they bought it recently? Should they keep an eye out? Should they just forget about it for a few years? What would be your advice to someone who has a current mortgage?
So I'll give you a few different examples there.
Yeah.
So anybody who's bought in the last, say, 8 to 10 months,
Okay.
almost a year, they're going to have an opportunity to refinance at a lower rate. And so it'd be good to just keep an eye on where rates are. I have clients call me all the time. I have clients call me, they tell me what the rate is, I put them on a hit list, and when it's the right time, and I usually tell people, depending on your loan size, you want to see a 1% to a 1.5% drop in the rate for it to be effective, right? And to justify any closing costs you'll have on a refi. And then you have some folks that are, I have retired folks or people that are approaching retirement talking to me about reverse mortgages. They can be a very effective tool to help maybe bridge the gap of your retirement plan, either on the front end or the back end. I'll give you an example. In conjunction with a financial planner, we were able to use a reverse mortgage for somebody who had a ton of equity in their house to hold off on taking Social Security till they could max it.
Yep.
So the reverse mortgage became a source of cash flow till they got to that point where they were going to max out their Social Security earnings.
And I'll tell you, to tie it into the estate planning and elder law context, where we definitely have seen reverse mortgages be a very, very good tool is for families who want to keep stay in their homes, and they want to remain in the home and receive care in the home, particularly in Pennsylvania. For what, the government has made a decision. They act very favorably to reverse mortgages as it relates to the asset and income tests for Medicaid. So we've been able to keep people in their homes, receiving care under the program, and still be able to take advantage of the reverse mortgage. So that has been a wonderful tool that we've been able to use in that context as well.
Yeah, I think, and that's a great example. I just had a woman we closed a couple weeks ago. Her son, who's a financial advisor, got me started with her almost a year ago. We took about a year to look at it and figure it all out. But her goal, she had a twofold goal. She wanted to stay in the house. She wanted to redo her bathrooms so that they were handicap accessible.
Yep.
Right? So what we did, she owned the property outright. We took $50,000 out, got the 2 bathrooms fitted up, and she has a line of credit available to her of $200,000 to tap into as she needs help as she gets older. Now, she's a pretty active 76-year-old woman, which is great, but she's planning for the future and saying, hey, if 3-4 years from now I can't get around, I can't shop for myself, I need help, I could pay somebody to come in and do that, and she could use that line of credit to do it.
That's amazing. And that's a perfect tool. Years ago, I didn't understand them. So, when you don't understand something, you tend to stay away from it just because a confused mind says no. But once I've gotten to understand them more and truly understand the value, and had a few cases where I was able to save people to remain in their home, get the care in their home that they wanted. They were adamant they didn't want to, go to a nursing home. They would rather get care in their home. To see the way that, in particular, Pennsylvania looks at the asset and the income from it, it's amazing that they allow it, and it certainly gives an opportunity that wouldn't otherwise have been there for someone to remain in their home. So I'm a believer. I'm certainly in the right situation. I think it's a wonderful tool for sure.
Yeah, I definitely think it's something. As you said, a confused mind says no, and I see that a lot. I see that a lot in the financial planning community.
Oh.
And it's kind of been my mission over the past year is to try and re-educate as much as possible, because it can really be, especially now, if you think about it, since 2018, most residences in across the country, let alone in our area, they've gone up over 20%.
Right.
So people have access to equity, and why take out equity that costs you money monthly to pay back?
Yep.
Take out equity; it doesn't cost you anything to pay back.
Yeah.
And that's the amazing thing. That's why the government set the program up through the FHA. They wanted to assist people to stay in their homes and retire.
Yep. And that was the whole point.
Yeah.
And then I think that's probably why when they created the Medicaid rules, specifically in Pennsylvania, they were so favorable to them, because they probably understood the policy behind it to keep people in their homes. And, overall, it's better for the government to keep us in our homes than it is to place us in nursing homes anyway. So I think it's a win-win.
Jeff, you know the numbers. I mean, you're
Yeah.
talking $400+ a day
Oh yeah.
to be in a nursing home. I mean, I've lived it with parents, my own parents, and I mean, it's a financial strain
Yeah.
to
It
do
is.
that. And the Medicaid flip side to that,
Yeah.
it's amazing they do the work they do for the money Medicaid pays them at those facilities. But
Agreed.
man, you could get that in your house.
Yeah, you
You
can,
know,
and the waiver program in Pennsylvania is a wonderful program, and they could have easily limited it with reverse mortgages, counting it as income and pushing people over the income cap limits, but they didn't, and they definitely really went pretty far, actually, I think, to protect the families, to keep people in their homes, allowing it not to count against the asset and income stuff, and they didn't have to do that. So I'm not often complimenting the government, I will admit, but in this case, I think they did the right thing in trying to keep people in their homes.
yeah, I do too. I think it was a great opportunity.
Yeah, for
And
sure.
you had asked, so for viewers who maybe are approaching the retirement age or beyond, one of the other things to consider is the one thing we know from the statistics are people amassed a lot of debt over the last 2 years,
Yes.
over 1.2 trillion in consumer credit debt. That consumer credit debt goes up every time the Fed raises rates, and for a lot of clients, we're actually doing some cash out refinances. We're taking the equity that's been gained and consolidating. And you think taking somebody out of a 3% mortgage is the wrong thing to do until you see the cost of the credit on their credit cards that they're paying. And now you start looking at the total cash flow and you say, no, it's actually the right thing to do.
Right.
And
Yeah.
you move them out of too much debt into a more manageable debt. So we're seeing more and more of that as the rooster has come home to roost in terms of the interest rate on the credit cards. Folks are looking for solutions now to get out of some of that stuff.
Yeah, and you can't blame them for the rates on that side, So that's incredible. So, Ken, is there anything else that you want to make sure we cover today, or tell my listeners or anything? I'm sitting here going, I'm having a great time, but I could talk to you all day. So,
There's a loan product that we offer. Not a lot of people offer it.
okay,
It's called an all-in-one loan.
all right,
I do my air quotes on that just because it's a very interesting concept. It's a European concept for doing mortgages, and the way it works is completely opposite of how you would think. Like a 30-year fixed-rate mortgage, all the interest is in the beginning of the loan, all the principal's on the back end. So when you're paying in, I don't care if you refinance at 2% from a 6%, you're still paying all your interest over again.
right,
Every 8 to 10 years in, you're paying mostly interest. Doesn't matter what the interest rate is, that's what you're paying.
right.
The way this loan works is it opens up as a giant line of credit, and you do your banking on that line. So you make your deposit if you have direct deposit, you direct deposit against that line of credit, and you write your checks off of it. And the concept is, not all bills are due on the first of the month. So if you have money coming in and it goes your direct deposit goes immediately against the line is charging interest on the balance outstanding. So every month it's on a lower balance. And you do your regular checking out of there. You use it as an ATM, you write checks, you pay your bills, whatever. But because you pay your bills over the course of the month, it applied the principal first and then work the interest off the principal. So as you pay your bills, yeah, they're getting a little more interest, but it was less interest in the beginning.
Wow.
That loan, I was not sold on that loan until I had a client who was a police chief of all people who said, if you don't have this loan, I'm not doing my mortgage with you. And I said, tell me more about this loan. And he told me, I said, I actually have a lender that does those. I never looked into it. So I looked into it, they actually have a beautiful simulation you can run on how you use your money to see if it's the right loan fit for you. But this individual, this police officer, he paid his loan, he had a 30-year fixed, he got out of that, got refinanced into this loan, paid his loan off in 8.5 years. And
Whoa.
didn't do anything unusual except use that line as his checking account.
And what is that called again, Ken?
So that's called an all-in-one loan.
Wow, very cool. I never heard of
Really
that.
interesting. I always tell people not everybody's going to qualify for it. You have to have good cash flow for one. You got to be the type of person that doesn't carry a lot of debt. It works perfectly for you.
Wow.
If you do that. So
Well, that is awesome. So, one more time on the name of your company and how listeners could reach out to you.
First Choice Mortgage Advisors. You can find us at firstchoicemortgage.com. And you can always call me direct, 610-637-7325.
Well, I want to thank my listeners for joining me today with Ken Pitts. I had so much fun. I knew I would. There was no doubt in my mind that we would have fun and the time would fly by. And as a promise to myself, I always try to stay under 30 minutes, and we're just going to stay in under the wire. So, Ken, thank you for your time. To my listeners, thank you for joining the Red Wagon Estate Planning and Elder Law Show, hosted by me, yours truly, Jeffrey Bellomo, where we discuss all things estate planning and elder law and, well, hey, anything else we want to talk about. Today we talked about mortgages, but we also had an opportunity to talk about estate planning and elder law. So we did find a way to weave that in as well. So please check out this podcast, and I hope you enjoyed your time with us. And until next time, we'll see you real soon.